Hi, this is Brian Gibbons. We've got an exciting little class today. It's exciting because it's not well known, and it is a wonderful tool to be able to help people sell property and use the IRS tax code to do it. Now, if you've never heard that from any of my videos before, I have a deep financial planning background, estate planning background, and I help people sell homes in California. And these homes generally are over $800,000 up to $10 million. There are issues with people that are well over $1 million that are selling their homes. And capital gains tax is one, and being able to get full price is another, and being able to sell relatively quickly. So we want to talk about one of our favorite tools to use. Now, my handwriting is not the best in the world, so please put up with me, but I'm going to go over some very basic things, and these are the kinds of things I talk about with your accountant. So let's just get started. What we have here is called a deferred sales trust. That's a trust. Now, if you don't know much about trust, that's okay. Everybody generally has heard of a living trust. I'm not saying it's the same thing, but there's beneficiaries and there's trustees and there's all sorts of things like that. Right? I just put up some very simple terms. I don't know if you can read this, but if you can, the first thing is the seller's property goes into the trust. So if you own a property, you put it into the trust. Okay. Second one is the trust pays the seller according to a payment contract, and those are installments. So over a period of time, you've got up to 20 years. This is legal. If you call me, I'm going to send you some links. IRS section 453 allows you to do this according to the code. Right? Estate planning attorneys use this all the time. Okay, now let's say that we want to sell our $1 million house, and we might want to get more than $1 million. We might want to get 1.1 for it. Can we do that? Sure, because we're providing financing. Now, what are the benefits? Here's a big benefit. We want to defer capital gains. Now, capital gains is this tax you pay after your exclusion. And you might not even qualify for the exclusion, but if you do qualify, most married couples have $500,000. Now, if you're a widow or you're single, it's $250,000. After that, it's 25%. That's a lot of money. So you could defer capital gains or eliminate the capital gains if you do this right. Okay? So how would you like to get top price and lower your capital gains tax? That's why we love deferred sales trusts. So you defer capital gains. What else do you get? Instead of a lump sum, you'll get monthly income for your retirement. Now, when I talk to you on the phone, it's not just getting cash. What are you going to do with the cash? How much cash do you need? Do you want to save on tax? Why go through all this trust building? Well, it's worth it because you can save a lot of money. Let's just think about the capital gains on a $1.5 million house. That's pretty easy in California, isn't it? So if you qualify for the $500,000, let's do $500,000 from the 1.5 is $1 million taxable. 25% of that is $250,000. What if we could minimize or get rid of that altogether? Would that be worth the hassle of doing this deferred sales trust? Would it? So give me a call. All right? I look forward to talking to you about helping you sell your California home at the highest possible price and the lowest possible tax. know,